What's up everyone, my name is Bowie and in today's video I'm gonna explain you what a fair value gap is, how you can spot them, how you can make good use of it, and a little bonus to take your trading to the next level. It is very easy but a super powerful tool to use, so stick with me and let's get into it. First of all, what is a fair value gap? Well, imagine if you grab a sheet of paper and a pencil and you draw a line from one side to the other one, but very quickly. Well, what most probably will happen is that there will be gaps or holes between that line because you did it very quickly. And this is how you have to see it in crypto with the fair value gaps. Price goes very fast up or down, causing it to create so-called holes or gaps in the market. Now we say that the market is out of balance. That's why many traders say to you that this is also called an imbalance. It's the same meaning, it just is another word for a fair value gap. So, how do we spot fair value gaps? Whenever we see a big red candle like this, where the low of the previous candle doesn't touch or cross the high of the following candle. Whenever we see this, we can draw a fair value gap box from the low of the previous candle to the high of the following candle, and now we have created a fair value gap box. And the other way around, when we see a big green candle like this, where the low of the following candle doesn't touch or cross the high of the previous candle, whenever we see this, we can draw the fair value gap box from the low of the following candle to the high of the previous candle, and then we get something like this. So, how to make use of fair value gaps? A fair value gap usually acts like a magnet for price. So whenever a fair value gap is being created, price will likely go back towards that area to fill the gap before moving forward. This right here is a very good example. Right here with the green candle, the fair value gap is being created. Afterwards, we trade a little bit above the fair value gap, and here we touch the fair value gap before moving further. So whenever we're trading above the fair value gap, it acts as a level of support. You see here, touch and bounce. And it works the exact opposite with a red candle. Right here you'll see that this is a fair value gap being created by this big red candle. So what does price afterwards? It trades below the fair value gap and uses it afterwards as a magnet, as a level of resistance before going back and moving further. So remember, when there is a fair value gap and price is currently trading below the fair value gap, then it can use it as a level of resistance. And when price is trading above a fair value gap, then it can use it as a level of support. So basically a fair value gap is like a magnet before going further. And so when price fills the fair value gap and so uses it as a level of support and resistance, we say that the fair value gap is filled. And so very important to know, whenever price uses the box of the fair value gap as a level of support or resistance, then the fair value gap turns invalid and we can't use it anymore in the future. So always look if the fair value gap is invalid or not. Right here you'll see in the other example that this fair value gap gets touched, so it's a magnet before bouncing up again. And right now this turns invalid because it's already used. If price is trading above the fair value gap, then I use the bottom line as a level of support. And if price is trading below the fair value gap, let's see right here, if price is trading below the fair value gap, then I use the top line of the fair value gap box as a level of resistance. You'll see here fair value gap being created, price trades below the fair value gap and uses it as a magnet and touches the resistance level before going back down. If you want to spot fair value gaps on your chart, then I highly recommend to only use it on the daily, 4 hourly, 1 hourly, and maybe even 15-minute time frame, but don't go lower than that, because remember, the higher the time frame, the more reliable these strategies are, and the lower the time frame, the less likely these will get respected. If you're lazy and you don't want to spot and draw the fair value gaps boxes by yourself, there's actually a really cool indicator you can use that does it all for you. You just go to indicators and type in FVG and click on the one that says Nephew Sam. So you'll see right now that the fair value gaps will be created for you so you can use them to take your trading to the next level. Personally, I use fair value gaps on a daily basis because it's so easy to learn and so effective to use. Please don't forget to subscribe, like, hit the bell, and write a comment down below. Or if you have any questions, just don't hesitate to join the Discord in the description down below. See you!